Okay, we're going to find time to put this on the screen for you. But of course, it's already out there on Twitter where you find us at all times. Was our poll question of the week. The Nigerian government last week unveiled the 7 big wins for the petroleum sector. And yesterday, they also unveiled a new gas policy exposure draft for the industry. So the question for the week is, are these enough to address the issues in the country's oil and gas industry? So you got 4 options as usual, whether yes and no, none of the above, or if you're indifferent. We're going to put that there. But if you're on Twitter, you know where to find us. At Channels TV, you find the poll of the week already there. Or if you want to check through at Bees Morning, that's also there. You can find it and bring in your comments. Over the last 24 hours, we'll find some comments coming through saying, well, it's early days yet, perhaps more details are needed. Keep it coming in our email, on our Twitter account. You can find that. And you can also put it at Harriet, who is a show anchor at CTV Harriet. And of course, if you think you want me to mind your business, put it at B. Bolson. Let's get to the oil and gas sector. The market punished Oando shares yesterday for that disappointing almost 36 billion naira loss for the third quarter 2016. It was the only stock the price moved down south yesterday. The rest kept muted. We'll take a look at about some of the earnings. But let's start with the numbers, as it were, for the big 7 listed in our market. We track for you every trading day. Start with corn oil. They just reported his full year, held his annual shareholders meeting about a week ago, unchanged at 35.90. 40 oil, big by market cap, sitting unchanged at 120 naira per share, the closing bell. Mobile at 190. Mobile oil reported a bit of a weak earnings. Well, still up, but not so significantly strong. According to Vetiva, the third quarter revenue by Mobile came in at 21.6 billion. That missed Vetiva Capital's estimates of 23.4 billion for the third quarter. So Vetiva says in an investment note yesterday that Mobile Oil is now being adjusted. The full year revenue estimate is now being adjusted to 96 billion against 109 billion previous estimates. That's what came in an investment note from Vetiva Capital. Now look at MIS. MIS also a bit of a small cap within that space, also reported its third quarter overnight 82.3 billion for the third quarter 2016 against 64.5 billion. Made more money. MRS is in positive territory. Cost of sales moved higher significantly by 12 billion naira, but operating profit still came in better than 2015 third quarter, September, ending from 1.6 billion to 3.1 billion. Finance costs also slowed down slightly, at least that's significant, 400 million to 1.6 billion naira. As far as the profit margin is concerned, MRS reported 1.1 billion naira yesterday as profit for the 3 months ended September 30th, 2016. That's much higher than 730 million naira reported in the same period last year. Earnings per share came in significantly higher, 461 kobo against 288 kobo reported in third quarter of 2015. Now move on to Oando, where we had that haircut there for this troubled energy trading company. Oando fell 4.85%. This volume was quite significant, 3.35 million units. Yesterday, Oando reported that its gross profit declined 52% despite a 26% uptick in its turnover for third quarter. Loss after tax, although decreased by 25%, but still significantly big at 35.9 billion. In the same period last year, Oando reported 47.6 billion naira loss. Now, if you look at the Oando Energy Resources, that's the segment or the subsidiary that is into oil and gas production, reported 20% decline in total oil production of 12 million barrels per day for the period. That's about 43,607 barrels per day. Oando Oil and Gas also reported a throughput volume declining 31% for the period under review. The market felt really unhappy with Oando Nigeria PLC, and the shares took a beating to £4.70. You find Seplat, the only E&P on our market there, 380 in total, sitting at 345. But if we get back to the gas conversation about the exposure draft that the Nigerian government, while they put it that, the NNPC, put back on the street and said, look, we're asking everybody in the industry to go through this, give us your thoughts. What do you think about it? This is what the Group Managing Director of the Nigerian National Petroleum Corporation, Mekanti Baru, says 2 days ago about the potentials, or how to optimize the potentials of the oil and gas sector. Listen to this.
With the growth in infrastructure, gas was hitherto inaccessible and flared is now being utilized. Nigeria has seen the most aggressive drop in gas flaring from the peak of about 2.5 BCM a few years ago to just under 7.7 BCM currently, and is reducing. In the next few years, we would have achieved flare out, that is zero flares from all the gas producers. Achieving flare out is consistent with the gas flaring initiative of the World Bank, which Nigeria has signed up. Beyond infrastructure, there has been a major focus on commercial framework for gas supply. Gas pricing has been adjusted to export parity. Legacy debt owed by the various sectors to gas suppliers are being extinguished through an intervention fund arranged by the Central Bank of Nigeria. Gas supply arrangements are being made effective with terms that assure bankability. These interventions are boosting confidence in the gas sector. A steady progress in this regard has been made, attaining an annual growth rate of 20% in consumption over the last 2 years. To date, over 1,000 kilometers of major gas pipelines have been laid and commissioned, comprising the X1, the open and Jakarta system, the Obi-Bono to Ascon. An additional 470 kilometers is presently under construction phase, comprising of the X2 looping and the Obi-3 gas pipeline, whilst a further 1,400 kilometers are in the project development phase, including the Ajakuta-Abuja-Kaduna-Kano pipeline, the QIT Obi-Bono Okunafon Obi-3 pipeline, and the ELBS Ilorin-Ejeba pipeline, with a view to commence construction before the end of next year. With the effort in infrastructure development, we would have expanded supply capacity, establishing an integrated gas pipeline infrastructure grid across the entire country. With respect to the domestic gas sector performance, let me summarize it in 4 broad groupings, namely the power sector, the commercial sector, gas-based industries, and the CNG and LPG. About 300